Hey guys, welcome back to the channel. Today I wanted to talk about ServiceNow stock ticker NOW and if I would buy, hold, or sell. So ServiceNow, they're one of these companies that quietly does, really, really important work behind the scenes. It's not super flashy, but it's really, really powerful. What ServiceNow actually does is a platform that enables large companies to organize and automate their workflows. Now, when I say workflows, you want to think about things like the HR process, right? Like onboarding a new employee, getting the contract signed, getting him access to, certain servers and data, getting them the laptop, getting the email address set up, all that stuff, right? I mean, that's just one example. I mean, you can bring that across, take that and apply it to project management, IT requests, approvals, internal systems, operations across different departments. And what's cool is if step one isn't complete, step two can't begin. And that structure sounds simple, but at scale, it saves companies massive time and money. And that's why the major companies use it. The Microsoft, Apple, Walmart, JP Morgan, Visa, NASA, Accenture, KPMG, and that's just a few names. And these are the big boys, right? I mean, the product is super, super sticky. Once a company's, adopt it, they rarely leave. And the switching costs, it's just too much, right? And that's where their kind of wide moat here comes from. And now they're acquiring Veza, which is an identity security company. Identity security is who has the permissions in your company internally to access the data, right? So when you think of cybersecurity is like external, preventing people from taking and stealing your data, while identity security is more internal about making sure only certain people have permissions to operate and work and do certain things. Um, and they're expanding their partnership with Microsoft, which is one of the best partners you truly can have. Revenue's been up 21% year over year. And I mean, for a company this large in the law of large numbers, it's very impressive. And why I'm bringing this all up is because, it's kind of trading for a steal right now. And you can look at it any way you want. We can go all the way back to 2017. You see that the median, we're not going to use the average. We're going to, smooth out, so to say, the highs and the lows here. But the median's at 67 times. And I mean, you bring it over any time period, 55 times. I mean, 52 times, 48 times. Whatever way you look at it, and I'm more so a believer in about 5 years of data. 55 times on a 33 times multiple is a very nice potential upside if the company hasn't seen any deterioration, which I'm not seeing. I'm seeing rumors, right? I'm seeing rumors that AI is going to come and eat their lunch. But you know with the rise of AI, software has been getting massacred across the boards, right? I mean, look at Adobe, look at CRM, and I already asked Grok here, how's AI disrupting SaaS? You can, kind of read through this if you want while I talk, but basically, Workday, even ServiceNow, they've all just been getting destroyed, right? They're dubbing it the SaaS apocalypse, and they're all down immensely. With the reason being that people think they can use LLMs like ChatGPT or Gemini or X to vibe code and create their own platform, their own software, which, in my opinion, is very misguided. But now, at that same token, even though it's misguided, it creates an opportunity for us, right? Now we can look and buy stocks much cheaper, stocks that we were waiting for an event to happen, right? If the fundamentals are staying intact and people are selling off of rumors, that's an asymmetric risk I'm willing to take as a value investor, right? And as AI is implemented into companies, they're moving away from the human workflow, right? I mean, this is how AI is driving and going against humans here and taking out software. You can see their point two here is, without human switching apps, agents can execute end to end workflows. We'll have minimal human oversight, and basically predominantly working through AI and agentic agents and so on. But think of ServiceNow as the control tower, their app in total, right? I mean, it's the one software that integrates all of this madness, right? ServiceNow is focused on combining all of this workflow to one, just a one piece of software, and that's truly unique, right? I mean, one platform. And with ServiceNow, you can make custom agents using whatever LLM you want and just plug it right in. You can have them integrate into existing workflows, data, integrations for monitoring, execution, and managing projects, right? I mean, and as ServiceNow starts to expand into agentic workflows and allowing AI to make the decisions, it becomes that much more prudent to start thinking about AI security. And that's kind of, what I have here. We talked about the AI control tower. We talked about the end to end process. Uh, what's interesting is their acquisitions lately, and to show you they think about this, they think about cross selling, they think about the full stack. As AI makes more decisions, it becomes that much more prudent to start thinking about security in terms of cybersecurity, in terms of identity security. And that's exactly what we're seeing with their most two recent acquisitions, right? The first one being Armis, and that was an acquisition for cybersecurity. And then Veza, which was an acquisition of identity security. Like we talked about earlier, who internally can access that information. And I will agree. And I think a lot of investors thought when they saw the stock with the announcement and the stock price went down that they overpaid for Armis. And I get it. It's like an $8 billion cash deal. I don't even think they do $1 billion in reoccurring revenue. It was an expensive multiple they paid, an implied multiple they had to pay. But the potential for cross selling and to have that full stack integration, in my opinion, makes it justified purchase, right? Did they overpay a little? Yes, but great allocators of capital and integrators, and developing this full stack platform, I think it was justified. And I mean, think about the cross selling opportunities. I mean, pairing up with ServiceNow is going to put Armis and going to put Veza in front of so many more eyeballs that they ever had, and especially way bigger dogs. We're talking the Microsofts, we're talking the big four accounting firms and so on, which can really help amplify revenues. Now, just a quick note on the Armis acquisition, talk about that a little bit. They're a fast growing cybersecurity company, and they provide real time visibility and protection across all types of connected devices. And it's not even just the regular IT stuff, right? But operational stuff like factory machines, medical devices, IoT, you name it. And ServiceNow is already killing it with AI powered workflows for security and risk management. But adding Armis lets them create this unified end to end system that spots threats instantly, prioritizes what to fix, and automates the response. I mean, in my opinion, it's a very smart acquisition. They're not just buying a company to show inorganic growth. It's a truly integratable and high chance of successful cross selling on this platform, right? And as these companies rush into agentic AI, where the what we've been talking about, the autonomous AI that's going to be actually handling the workflow, doing the execution, just with human oversight. The biggest risk is uncontrolled access, leading to breaches or chaos. And Veza nails that by enforcing the least privileged access, spotting risky entitlements in real time, and giving deep visibility into who and what can touch that. I mean, adding this and folding Veza in supercharges their security and risk portfolio, and I think it's going to prove to be very successful in the future with being able to cross sell some of these security products in here. And I just wanted to show you some of the features here at ServiceNow. And they talk a lot about the control tower and how it works. And in a nutshell, as companies deploy tons of AI agents, things get chaotic fast. There's a lack of visibility, there's governance risks, compliance headaches, shadow AI popping up everywhere. I mean, AI control towers fixes that by giving one unified dashboard. Okay. It's centralized inventory of all assets, models, agents, prompts, data sets, third party ones, real time monitoring, risk management, performance tracking, and automated workflows to govern, secure, and optimize everything. Like, you have to understand how important this is for a massive company that employs thousands and thousands and thousands of employees, right? I mean, imagine how much money this saves you. And then I wanted to just talk about, ServiceNow, which in simple terms, it assists analysis turns everyday workflow into AI powered supercharged versions, essentially, right? I mean, it'll summarize cases, draft responses, help you suggest next actions, generate codes, power smarter search. And I mean, the list goes on. It's not just chatbots anymore. It's agentic AI that acts, reasons, automates across several key functions in your company: IT, HR, customer service, dev, and more. I mean, it's really impressive what this company has been able to develop here. And now, just looking at the company fundamentals, we get the story, Mark. What's going on here? Well, total revenue quarterly from December 20 to September 2025 is what I have booked. They haven't ever dipped down. I mean, it's so impressive. It, like, to have continued successful revenue growth like that every quarter, positively increased, speaks to not only how great their product is, but the moat they have that people won't switch. Very, very impressive. I think continuing on, well, okay, they make a lot of money in terms of revenue. What about profitability? The green line up here, 78.1% is their gross profit margin. You can see it's only gone up over time. And when gross profit margins go up over time, it shows, it kind of almost solidifies the moat, right? Because no one can just come in here and undercut your service as identified by the gross margin, right? I mean, if someone could just come in and duplicate what they're doing like that, their margins, they'd have to drop prices to compete. They have a lot of pricing power here, I guess is what I'm trying to say, from their, products. And then when you look across everything, free cash flow, the hardest metric to be profitable on. I mean, it's absolutely beautiful. I mean, 31% of revenue coming in the door is converted to free cash flow. Cash flow is cash that came in the door minus what went out the door. And it's not these fake depreciation expenses and everything. So very, very impressive. And taking a look at the EBITDA margin, I mean, they've continued to grow and climb, and they're at 24% EBITDA margins, 13.7% net profit margins. Like, the company does not have a problem here turning a profit. And when you look at the chart, I mean, it doesn't really look to me like vibe coding and artificial intelligence is coming to eat ServiceNow's lunch. It looks more like a rumor than it does something actually impacting the fundamentals. And then, I talk everyone's ear off about this. It's my favorite. It lets as management know what they're doing. They know where to put their money. Every dollar spent on equipment, research and development, everything, they're able to generate pretty solid returns on invested capital. And, I will say it is not over that 10%. Anything over 10% is really, like, really a bang up job. But I also think you have to remember that these last couple of years, right, they're moving and trending in the right direction. But especially in 24 and 25, they've had heavier investments where they're expecting a lot more revenue to be coming in the future. So I expect the trend to continue upwards. But always good to see positive ROIC. And again, not at that stellar 10% we love, but a 9.3% isn't too shabby here, especially considering the intensive capex they have. And then another thing I liked was, the insider ownership, right? There's always something to be said about founder led companies, with here for Frederick Luddy, founder and director. And, he doesn't even hold 1/10 of 1%, but he holds 770,000 shares for about 128 million. So it's safe to say this guy has some serious skin in the game, right? This dude's fighting for his life here. He's got 128 million. It's probably majority of his net worth tied up there. So you could say our ideas, incentives are aligned between management and us, which I always like to see and think it's a good sign. And just so you know, I'm not making stuff up here. You can see on the Harvard Business Review, and I mean, this is an old article, but it still stays true. Founder led companies outperform the rest. And I guess my membership, I'm not logged in. I'm not going to do it right now, but there's a graph down here and it actually tracks it versus the S&P 500 without founder led companies over time. It's really interesting. I recommend you guys taking a look at that. But again, like I said, the capex has been exploding, spending more than they ever had. By a healthy margin too. This is like a 30% increase from 23, which was one of their highs. 23 to 25, which is one of their highest years already. I mean, historically, as you know, software companies are pretty light on the capital expenditure scales, but it also goes the other way, right? As much as you're spending, is it risky? Does it hurt the short term? Yes, but long term, if you're not spending, you're not doing the research, you're not building the factory, you're not, in this sense, developing the software and getting the devs out there. But, you know, it really speaks to how much the potential revenue growth is, right? High capex is highly correlated to revenue growth. And now just going over the total remaining performance obligations. I mean, just absolutely bizarre, right? Very, very, very large backlog. So, I mean, it's safe to say that not only do they have a pretty high growth rate, but it's pretty much guaranteed here, already under contract in the backlog here. Very impressive. And then when I tell you it's so sticky and they have a moat, look at the renewal rate, guys. 1 year it dropped down to 97%. I mean, 98% of the people are keeping this. And like truly on that renewal rate, like I'm curious about the other 2%. You think it'd be like 100%, but I mean 98% of people. I mean, no one's getting rid of this. Especially, you think compliance for a multi-hundred-billion-dollar company, a multi-trillion-dollar company is going to be like, oh yeah, we're gonna have John over here vibe code us and make sure it's compliant, no mistakes. Like, come on, man. Like, that's not even a real thought here, right? Um, but debt to equity ratio, again, the company has a very strong balance sheet position, very strong income statement, very strong fundamentals all around. Again, it's the sentiment, it's the narrative that's what's changing this. And, for every dollar in equity they have 20 cents of debt. That's nothing, yeah, that's a drop in the bucket. And I just wanted to leave you with two comments from the CEO in his Q3 2025, what he mentioned here in October. When you think about brand shaping the future, you have GPU leaders like NVIDIA, hyperscalers, foundation models, and one company integrated all together, the AI workflow company ServiceNow. It used to be the Mag 7. Now there's a new category. I'm calling this the Super 8. That's the Mag 7 plus Service Now. That's right, the Super 8. That's a pretty ballsy comment, right? I mean, that is a bold claim that in a scenario when the stock's down like this gives me some extra confidence on top of already seeing the partnerships, already seeing the software and being familiar with it, seeing the strong fundamentals. And now you have the CEO, saying stuff like this. And then I just thought this was another good point he had was the root cause of nearly every failed deployment of enterprise technology in history is the lack of integration. And even the ones that worked took years to get a positive ROI. To change this paradigm, AI has to run east to west across the enterprise and north to south up and down the tech stack. ServiceNow's AI platform can do this like no other. For every process that transcends departments and systems, ServiceNow Workflow Engine is creating the roadmap that AI agents follow to get work done. To me, I'm a big buyer in ServiceNow. I'm excited about the stock. I understand. I mean, especially if you're looking at the PE ratio currently, I think it's like in the 70s maybe, but I mean, it's important to keep in mind the forward PE and knowing that they have the guaranteed backlog pretty much is confirming that growth unless something material were to happen to a company or something in the economy change. But for me, I think it's a strong buy. I like the stock. I think it's really cheap. I think this whole narrative around software going away and being dominated by AI is kind of not well thought through. But let me know in the comments what you think. I'd love to hear from you guys. All right, take care. I'll see you in the next one.